Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Let's take a look at the pound kiwi and see where we can identify supply and demand areas. It's been about a month since I've made an updated video on this Forex pair. So let's take a look on the monthly. There's this level of supply that's been keeping price in there, rally a little bit and then a drop, and then now there's a bullish engulfing candle here, so it's signifying that it wants to go back up here and penetrate into this monthly supply zone deeper. The deeper it goes, the more orders that it takes out and the more likelihood that it's going to penetrate it. But we can see that there's also another area of supply, which is this continuation pattern right here. So once it breaks through there, there's another zone. So what is our bias? Our bias is definitely not long, because we got these two obstacles that are prohibiting price from going up higher. So we want to ideally wait until this gets taken out and then short, because this has been used up but this area has not been touched, so it's going to be pretty strong. And we can see that there are this drop is pretty aggressive, and you see this big red bar, and then all this time that price has been down. So this area of supply is nice departure and fresh, so it's a good area to short. So once this area goes up, breaks it, we can short up here. On the weekly, we have an area of demand down here that held price together, and then it cannot go, we cannot buy anymore because this area of supply is in control, and then this area of supply is in control again, and then another area of supply and control up here, which is this area here. But then this is also the next area of supply that's been created. So we can see that there are just supply zones after supply zones after supply zones. So we want to, we cannot buy, even though they have these strong engulfing candles. We don't want to buy. We want to be able to see where our opportunities are to sell in the market. Okay, 4 hour looks so sometimes when this 4 hour chart looks really, like whenever you zoom out you can't really see anymore. So sometimes I like to, this is my charting platform, TradingView. Sometimes I would do like a horizontal ray and then sync it and do another horizontal ray, and then that way, okay, so that way I know that this zone is the same as this zone here on the 4 hour. So this zone here is the same as that. Okay, and then which is also the same as this and the same as this. Okay, so if price breaks through this zone, we can think about shorting up here, which should be the same as up here. Yeah, well, let's take a look. Okay, So the monthly, we know that price is going to come back and retest this area of supply. On the weekly, price is changing momentum, going to break this area of supply on the weekly, and then it's going to break this area too. But we don't want to buy right here because supply zone is in control, and we also do not want to buy here because this zone, let's say if it breaks, there's many different scenarios that can happen, because if price breaks this zone, then this is the next obstacle that it must reach. But we do not want to buy anywhere even though this zone is broken and this zone is broken, because it's in the higher time frame of monthly area of supply. So there's a bunch of sellers here. Even if it broke these areas, this is just giving the liquidity for big banks and institutional traders to short up here, because you're already in their zone even though you broke these zone. The bigger picture says that you're in this higher time frame supply zone, so you're gonna if you buy, you're gonna lose because you're buying from their selling positions, if that makes any sense. Okay, so big picture, we don't want to buy because price is too high in this supply zone, and all supply zones are in control. So if you're trading the weekly, daily, 4-hour sequence, if we have to wait for this zone to break, which this zone is the same as this zone, and this zone is the same as this zone. So we want to wait for price to break above this zone, and then want price to break above this zone, and then retraces to this area of demand, and then we can go long. And you can figure the same thing for the 4-hour, but really 4-hour is your entry, your sequence of entry. So you want to make sure this area is broken, which is the same as this area. You want to wait for price to close above this area, retrace, and then buy, or else retrace to this area. But if you're trading the monthly, weekly, daily, then we don't want to do anything, because the monthly is the supply zone is in control, and when this area of supply zone is in control, like if you look at the cursor, this cursor right here, is this area of supply is actually right here. So supply zone is this huge area on the, if you put this area of supply zone into the weekly or daily charts, it would have started right here already. So yeah, you're already in the area of supply zone on the monthly, so you don't want to buy into that because this higher time frame is in control. Okay, so if you're trading the monthly, weekly, daily, no longs allowed, because supply areas of supply zones everywhere is in control, especially on the monthly, and that's your bigger picture time frame. That's supposed to let you know what your bias is. And even though there's a bullish engulfing candle here, you don't want to buy because you're at a higher level, higher area of supply. If you're trading the weekly, daily, 4-hour, you want this weekly area of supply to be taken out with a candle closing above this, and wait for a retracement before you buy. You don't want to just wait for this candle to break, form this, and then just buy, because it could rally. It's not enough room to have a risk to reward. You want to wait for down here and then retrace it down here and then go back up. That would give you a much better risk to reward and higher odds than to just buy up here and then it doesn't give you enough room to reach your target, your profit target. Okay, and so that is the analysis on the pound kiwi. I hope you found this analysis useful. Please share with your friends, and I'll see you in the next video. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.